Hey guys, welcome. In this video, we'll be discussing important levels of liquidity and how you can identify and trade them on your chart. Here on this PDF, I have summarized every important liquidity level I believe you should be focused on, and I have classified them into the following. To the left, we have the external range liquidity, which is the swing high or low, the previous high or previous low, the equal highs or equal lows. And to the right, we have the internal range liquidity, which is also imbalance, which are fair value gaps and liquidity void. So without further ado, let's go to the charts and see examples. And if you want this particular PDF, the link is going to be in the description. So the first important level of liquidity we're going to be looking to identify is the swing high and the swing low. And right here on the chart on Euro USD on the daily time frame, you can see we've already identified the swing high and the swing low. The swing high to the buy side and the swing low to the sell side. Let's see how price reach for either one of these levels and how it reacts from it. So right now we can see that price has reached for the swing high right there, and we can see how price has given us this down close candle right here. So this is a very good reaction telling us that this is an important level of liquidity. So let's see what price does from here going forward. Right now we can see how price reacted from this level of liquidity and in form of a reversal, pushing now for this level of liquidity to the sell side, which is actually a swing low. So let's see what price does going forward. And we can see how price took out this particular level of liquidity, which is a swing low. So right here is how you can use swing high and swing low to frame a profitable setup. So right here we can see we took out a swing low and price move aggressively to the buy side, taking out a swing high. So this right here now is a market structure shift. So going forward, since we are now in a buy trend, we're going to be looking at swing highs for our area of targets or our draw on liquidity. So let's see what price does going forward from here. And there you have it. So you can see how price, after this particular market structure shift, price push aggressively to this next swing high, which is our draw on liquidity or area of target. So swing highs are important in buy trend formation because they can be used for area of target, while swing low on the other hand are important for sell trend formation because they can be used for area of target as well. And the reverse is the case. As you can see right here, swing low is important in this scenario because it can be used to gauge or time reversals. So same also can be said for a swing high in a sell trend formation. So you can see right here, this swing high was used to frame or gauge a reversal. And you can see swing lows were used right here as area of target or draw on liquidity. So the next important level of liquidity we're going to be looking at is previous high or previous low. So when we look at previous high or previous low, we're simply looking at previous high or low of a session, of a week, of a month, or a given day. We're not looking at anything beyond that. So right here on this particular example on the chart, we're looking at a previous daily high and a previous daily low. So previous daily high and previous daily low can be used as either a draw liquidity for target or an area of context, in other words, where you can frame your setup from. So right here on this particular example right here, we can see how price has taken out a previous daily low right here. So this is a context area, and going forward in price, we can see how price attacked a previous daily high, which is our area of target or draw on liquidity. So this is how you can actually use previous high or previous low to frame setups. So let's look at how price moves from previous high to previous low and vice versa. So right here we can see how price has taken previous daily high, and going forward price now has taken out a previous swing high, which is also a previous high right here. Now at the close of this particular candle right here, we have a new daily high formed right here, and going forward we can see how price used that particular previous daily high as an area of target. Now we mark out this new high that has been formed right here, and we mark out this new low that is formed right here. So let's see what price does. And we can see how price took out this particular previous daily high right here, using it as an area of context. And you can see how price sold to the sell side. Now we have a previous daily low right here and a previous daily high right here. So let's see what price does. We can now see how price took out this particular previous daily low right here, giving us a good reaction in price. So here can be our area of context to see price target this previous daily high right here, which will become our draw on liquidity. So let's see what price does. And there we have it. So this is how you can actually use previous high and previous low on a daily time frame, weekly time frame, monthly time frame, or on a session base as important level of liquidity to actually frame context or draw on liquidity. So the next level of liquidity we're going to be looking at is the equal highs and the equal lows. So right here on the 4 hours, we've identified an equal highs right here. This high and this high right here, you can see they're in close proximity, so they qualify as an equal high right there. So this can be used as an area of target or an area of context to trade from. Right here, we're going to be using it as an area of target. As we can see, the price has broken structure right here. So we want to see how price is going to capitalize on this particular equal highs as a draw on liquidity. So let's see what price does. And there you have it. So you can see our price move aggressively all the way to that particular equal high, attacking it as our draw on liquidity. So let's see what price does from this particular equal highs going forward. We can now see how price has reverted into this particular range right here after running this particular equal highs. Mind you, you can use equal highs as an area of target or a context area to trade from. So right now we have an inversion fair value gap right here. So let's see if price is going to capitalize on this inversion fair value gap and move aggressively to the sell side. So let's see what price does. And there you have it. You can see how price moved into this particular inversion fair value gap. You can see how it gave us a break of structure right there. So let's see what price does going forward. And there you have it. So you can see how price from an equal highs gave us a context area to trade from, and you can see how we could have framed our setup from this inversion fair value gap aiming for sell side draw on liquidity. So equal highs can be used both as an area of target or an area of context to trade from. So right here we've also identified an equal lows on the 4-hour time frame on the Euro USD. So these are equal lows right here. As you can see, these lows are in close proximity to one another. So we want to see how price is going to use this particular equal lows as an area of target or draw on liquidity, because we've already seen market structure move to the sell side. So let's see what price does. And there you have it. So you can see our price, after giving us a deeper retracement, came all the way to target this particular equal lows right here. And mind you, just as we saw in the equal highs example, equal lows also can be used as an area of target or an area of context to trade from. So let's see what price does going forward from this particular equal lows. Right here we can see price has given us a market structure shift right here. So let's see what price does going forward. And there you have it. So you can see our price move aggressively to the buy side, taking out buy side liquidity. So for our next level of liquidity, we're going to be looking at fair value gap, which is an imbalance. So this is an internal range liquidity. As you can see, it is happening within a range. The other ones we looked at before now are external range. In other words, they happen at the end points of a given range. So right here, we want to see our price trade into this particular area of liquidity and trade away from it, saying that the market structure is already bullish. So let's see what price does. And there you have it. So you can see how price capitalized on this internal range liquidity and attacked this particular external range liquidity, which is a swing high right here. So right here is another example of fair value gap as internal range liquidity. So we want to see how price reach for this particular internal range liquidity and aim for external range liquidity, seeing we already have market structure momentum to the sell side. So let's see what price does. And there you have it. So you can see how price reach for this particular fair value gap right here and push aggressively to the sell side. So the next level of liquidity we're going to be looking at is liquidity void. So right here, we can see that price reached into this particular fair value gap and traded away from it, but price did not fill this particular imbalance completely. So let's see what price does going forward. We can see how price came back and filled in this particular area of liquidity completely. Why? Because the moment price left this particular area of liquidity, here became a liquidity void. In other words, that was a void that needed to be filled in price. And you can see how price came all the way to fill in that particular void, reaching for this particular order block. And going forward, we can see the way price traded away from it. So right here is another example, and this piece of price action is kind of tricky as we have two fair value gaps right here. So I want you to view this particular scenario as a liquidity void, because price can reach for this particular fair value gap and push to the buy side, coming back again for this particular fair value gap, or price can ignore this particular fair value gap, reaching for this lower fair value gap before pushing all the way to the buy side. But either way, this should be viewed as an internal range level of liquidity. So let's see what price does going forward. So we can see our price has reached for this particular fair value gap and gave us a good reaction in price right there. And you can see our price took out this previous daily high and also rejected downward. So let's see what price does. We can see our price has filled in this particular void completely right here. So let's see what price does going forward. Now we can see our price has reached for this lower fair value gap right here. So let's see what price does going forward. And we can see our price move all the way to the buy side. So this is how you can use this important level of liquidity outlined in this particular video to frame high rewarding and high probable setups. So I hope you find value in today's video. If you do, hit the like button, hit the subscribe button, and if you have your thoughts or questions, you can leave them in the comment section. Until next time, see you in more videos.